Good morning, it's UPB from OptionMillionaires.com. September 12, 2013. Thanks for tuning in. Been talking about MasterCard for a couple weeks now, heading into this investor day that was held yesterday. And you can see we've already come out of it with some upgrades. You can see the stock's been rallying into it. Guess what's going to happen here? Further upside coming. Stock's going to hit new all-time highs today. Looks very bullish from MasterCard, and Visa, of course, has been on the upswing. Why? See this gap up was added to the Dow Jones Industrial Average in place of Bank of America. So we can see further upside for Visa. See the stock heading to about 195. How about Lulumon? Let me pull up my other real-time chart here. We got Lulumon taking it on the chin this morning, dropped to 61.11 before recovering a little bit, but for the most part, anyone buying the calls, you're screwed. Put buyers looking pretty good, but I think the stock's going to roll over here. At some point, we're going to see some of the analysts come out and say, oh, they're going to defend the decline and say that the stock's going to head higher. But for now, play it for downside. That's what it looks like the trend is today. How about Apple? Carl Icahn came out after the bell yesterday when the stock plummeted, was down over 5% at the close. Came out after the bell, see the spike here, and said, hey, I was buying stock on the decline. This is the same gentleman who was buying stock when it was up at about, what, 460 something, and spiked higher. So Apple, I firmly expect it to head higher today. I'm looking ultimately by the end of close tomorrow, the 480 strike, which I alerted to my private Twitter account. The 480s at 70 cents, they doubled before pulling back, so it's a nice move. So Apple, looking for upside. We bottomed here 465. See this level here? 465 yesterday. Looked like significant support, and this right here is when I alerted the stock. It rose to 471 and change before pulling back. That's when I got into some call options. So Apple, upside coming. How about the S&P 500? Let's pull into the chart that I have for it. And you can see I like to call the lows here. You see those yellow dots? But I like to call the lows that we've seen since November. I like it to call it the Abe Shinzo. I like to say that. I like to say Shinzo. My wife gets home. I say, hey, baby, have you seen Abe Shinzo? Anyway, you can see the V-bottoms we've had since November. We had a rounding out kind of V-bottom here. And then this time around, kind of faked us out a little bit. We have a nice W-bottom. I expect stocks to come up, or the S&P 500 ETF, the spiders, to come up to this all-time high level and then handle. You know what a handle is? Cup and handle, right? We got the cup. We got the cup. Fill it up with some alcohol, or whatever you want to put in it, some green tea. Maybe you're a vegan. Put some, some pureed squash in there. I don't care. Whatever you want to put in that cup, we're heading higher. And we'll get the handle here so you can drink your pureed squash or your, dehydrated lemon. I don't know. I'm just making up names now. But I think stocks are ultimately going to push to new all-time highs. Everyone's going to be baffled. Talked about this about 3 or 4 weeks ago when Syria just first started coming out and saying, we were going to bomb them and whatever. The Syria situation was coming to a head. And I said, Syria, like Cyprus, the sequester, gosh, the fiscal cliff, the debt ceiling, oh no, the European debt zone crisis, Greece, Portugal, Italy. Right, each one, like these dips we've seen since November, the Abe Shinzo low has been a great, absolutely fabulous, spectacular, lovely, beautiful buying opportunity. And that's going to remain that way until the central banks globally stop printing money. You know what printing money means? It means having an unlimited credit card and just using it everywhere. My wife would be so happy with that, wouldn't she? Oh, goodness. She wouldn't be balding, though, like the chairman of the Federal Reserve, Ben Bernanke. But we do have the debt ceiling coming up. The debt ceiling. Remember the debt ceiling? That will be the next headline. That'll be the next, oh my goodness, the debt ceiling. We've only increased it every single time since we hit that ceiling. But here it is again. So, that maybe will be the next kind of, oh my goodness, sell everything. I would be selling into strength here. Everyone was saying at 163. My goodness, if I was selling into strength at 163, I'd be out of shares about here. Now, when the freak do I buy? My goodness, stocks are at all-time highs. Should I have sold into strength, or maybe I should have just bought? That's what everyone's doing here. Let's go to Sears Holdings. You look at the short position here in Sears Holdings. Look at the rise we saw. right up to resistance before pulling back. You can look at Sears Holdings as really the calling card of this rally from 2008 and 2009, namely because it's so heavily shorted. And these heavily shorted stocks do this. Look at this. I mean, could you imagine being short at 40 bucks a week and a half? Honey, yeah, I shorted up here. We were at 50 and change. I shorted. We're doing great. And all of a sudden, 7 days later, he's on the golf course getting a margin call. Sir, you're going to have to close out your Sears Holdings position because you're down significantly on that, and you can face massive losses if it continues to go to the upside. Well, honey, let's cancel that trip to the Bermuda. That's what I think is going to happen with UNXL. UNXL is a great stock here. Look at it. It's coming up against support, long-time trend line support. It was a $40 stock earlier this year. I think it's going to head higher, over 20 bucks in the next, 3 to 5 weeks. There's a lot of bears, a lot of bearish perspective on it. Think it's a scam. They partnered with Kodak. Kodak's a former Dow Jones Industrial Average component. Obviously, they went bankrupt because nobody uses cameras anymore unless it's on their cell phone. And there's no Kodak smartphone, so obviously they have nothing to sell. But UNXL, Unipixel is utilizing their facilities up there in Rochester. Looking for revenue to start coming in December, and the market's always forward-looking. So right now we have no revenue. But we have no debt as well, which is a good thing. We have a lot of cash. And the stock, to me, when it starts moving higher, and obviously it's going to run the market. So when we expect revenue to come, the stock's going to move up before that date. So I think that's coming here. We had record short interest announced on this stock. Over 40% of the shares in this stock are short, meaning they're trading for downside. Same thing we saw with Tesla. Remember Tesla when it was at 27 bucks? Yeah. Over 40% of the stock was short then. Nobody believed in the stock. Nobody liked it. Everyone was like, Tesla, who's going to buy an electric? Well, apparently a lot of people. Tesla's at $164, up 400%. So Unipixel, oh, it's a garbage stock. It's a scam stock. Yeah, 40% of the stock is short until it goes up to, I don't know, $40, $50, $60, and then maybe the shorts will start to cover. At that point in time, with over 40% of the shorts stock short, you're going to see some additional buying pressure. So I like UNXL. Why not? Buy some short-term calls, and I'm going farther out of the money. We're going to go higher with Unipixel. So that's UPB from OptionMillionaires.com. I like stocks higher here. Let's check out finally bonds. My goodness, we might come back up again to this 105.50 line. That is something to watch, but I think ultimately the long-term picture on bonds is the flush. It'd be good if we came back up to this line, came down to this $100 level, which is another longer-term support line, and then ultimately, crumble like I think is going to happen. But this kind of consolidation here, it's a good thing. It's a good thing for the bond market because it's giving opportunity for people who want to get out, a chance to get out. It's also good for the stock market because I think any kind of precipitous fall for bonds in price and a spike higher in rates will ultimately be bad for equities. But I think if we can make this a mundane kind of slow melt lower, even this kind of move, as long as the market participants know what's coming, I don't think it's going to be so bad as everyone thinks for the stock market. Oh my goodness, 3% 10-year Treasury yields. This is the... Yeah, that's what you hear in the media, right? I mean, they want to blow everything out of proportion. Unfortunately, stocks are going to be at all-time highs, so yeah, pick your poison. All right, UPB here from OptionMillionaires.com. Have a great trading day. Goodbye.